Big changes are coming to your retirement plans. Regulators are now opening the door for private equity, private credit, and other alternative investments to show up in your 401ks. So, what does that mean for you? I'm Caleb Sturgis with Clarity Wealth, and this is today's Friday Fireside Chat. Traditionally, 401ks have been built around two core building blocks: stocks and bonds. Stocks give you growth, bonds give you income and stability. But recently, policy shifts have changed the landscape. An executive order earlier this year directed regulators to make room for alternative assets and retirement plans. And guidance that once discouraged private equity in 401ks has been lifted. So going forward, you may start to see private market funds appear alongside your regular investments. Why is the private market so excited about this? Because 401k plans represent an enormous pool of capital. In fact, according to the Investment Company Institute, Americans hold about $8.7 trillion in their 401k plans. And these fund managers want access to that money. They're already starting to build products that are going to be tucked away in your target date funds or could be a separate menu item entirely. Now, there are potential upsides here. Private investments offer higher returns and exposure to opportunities you don't get in the public markets. But there are also trade-offs. Fees are generally higher, reporting is less frequent, so performance is less transparent, and most importantly, liquidity is limited. That means your money could be tied up for 5-10 years, making it harder to rebalance or adjust as circumstances change. So if your plan begins offering these options, here are 3 questions to ask yourself. First, does it truly fit your portfolio? Right? Just because it's available doesn't mean it's right for you. Second, how is the liquidity being handled? Target date funds usually take into consideration your time horizon, but you'll want to double check of how the fund manager is tying these into this product. Or if it's a separate menu item entirely, you'll want to consider, can you wait 5 to 10 years to get access to this capital? And third, what are the costs? These products almost always come with higher fees and less frequent reporting. You'll want to make sure you're comfortable with these trade-offs in exchange for potential higher returns. The right answer is going to depend on your personal time horizon, your risk tolerance, and your overall retirement goals. The bottom line is this: these changes create more choices, but also more complexities. So if you see private equity or private credit show up in your 401k, let's sit down and review it to make sure it's right before making any decisions. And if you found this video helpful, please hit the like and subscribe button on the bottom. And as always, thanks for joining me on today's Fireside Chat.